Hi everyone, welcome back to the channel. This is Rosario Borgesi, and today I want to talk about DeFi. Let's understand what are its benefits over traditional finance and what are its main protocols and use cases. So, let's get started. The first thing to say when talking about DeFi is that the user interact directly with the smart contract deployed on the blockchain. There is no middleman, there is no bank, there is no central institution, but users with their wallet, which can be MetaMask or whatever, interact directly with the smart contract deployed on the blockchain. What it is DeFi? DeFi means decentralized finance. So we are talking about protocols or financial services that are built on the blockchain. And as we said earlier, there are no banks and there are no intermediaries. And it's fully powered by smart contract. It's open, meaning that anyone can access DeFi protocol. There are no restriction. It is permissionless, so nobody can stop you from using a protocol, and it's global, so it's not limited to a specific country, but you can access a protocol anywhere in the world. Let's talk about the difference between traditional finance or TradFi and decentralized finance or DeFi. So, in the first case, the users interact with a middleman, so for example, with a bank. In this case, as we said earlier, in DeFi, users are interacting with a smart contract with their wallets. So let's go more into the details. Um, in TradFi, we have banks and intermediaries, and of course, the software in this case is centralized. So there is someone who owns the software, the application, and can also can prevent you from, for example, for using your application. For example, think about periods of bank run or something similar, or when there is an economic crisis, banks can stop their services, and so the users cannot, for example, retrieve their money and cannot perform operation because the website, for example, is has been stopped. So you need a permission because, of course, to if you want to deposit money into a bank, you need a permission. You need to provide documents, and of course, it is limited because the bank is limited in certain days, not for example in the weekend. It is custodial, so you have to trust the intermediaries, which of course can also prevent you from withdrawing your funds. And of course, it is slow and expensive because you have to pay fee, credit cards, and so on. For example, think about sending money overseas. It may require days, and you have to overcome some security checks and so on. Not so free to use. Instead, in DeFi, we have smart contracts that are deployed on the blockchain. It is decentralized because no one owns the blockchain. The blockchain is permissionless. Everyone can join this protocol, can use them. You can use these protocols 24 hours per 7, and of course in this case you can have self custody. You can own your own funds with a wallet, storing securely your private key. And of course it is fast and global. For example, if you um, there are no restrictions over country. You don't have to provide the documents, and of course, nowadays with layer 2, the costs on transactions are very cheap. Let's talk about the core services provided by DeFi, which are lending and borrowing, DEXs or decentralized exchanges, stablecoins, and liquid staking. So let's talk about lending and borrowing. In this case, we have two main actors that interact with the protocol, which are the lender and the borrower. So the lender supplies crypto and earns interest, while the borrower locks collateral to borrow assets. In this case, of course, there is no central authority that can stop you from borrowing money or lending money, and of course, you can do the same thing that a bank can do. An example very famous about a protocol that provides these services is Aave, and this is the symbol. Another important protocol that has been that is a core protocol in DeFi are the DEXs. DEXs meaning, as we said earlier, decentralized exchanges. Here we have two main figures, which are the traders that swap tokens directly from their wallet. So basically, they are changing one wallet, one token, one crypto to another crypto. And then we have liquidity providers that earn fee by supplying liquidity to the protocol. So there is one actor that provides liquidity to the protocol, and another actor that uses this liquidity to perform trades. An example is here Uniswap. Another major protocol are the stablecoins. Stablecoins is a very wide word, but they most of them come down to a basic principle, which is a stable value. Basically, a stable coin means that you have a token that has a fixed value. So, for example, since Ethereum or Bitcoin are very volatile, in this case, you have a token that is it has a stable value. Most of the times, it is pegged to a fiat dollar like USDC. So you can have, for example, Tether, which is where one USDT is exactly equal to $1, and it is used for many use cases like payments, trading, and savings, and it is backed by assets or algorithms. Another important protocol is liquid staking. Liquid staking meaning that since many protocols like Ethereum work with the proof of stake, this protocol allow you to stake tokens, and this way you create a validator, and you contribute to the security of the protocol. So you can stake your tokens basically, keep your liquidity that can be used in another protocols, and of course, while staking your tokens, you also earn a rewards. So guys, thanks for watching this video. This has been an introduction to DeFi. In the following videos, we will cover in more details the use case and the protocols that we have briefly introduced today. Thanks for watching, and see you in the next one.